All right, here is January 23rd, Tuesday. Just want to do a review. This is a great example of consolidation. And you have to be able to recognize and know what your plan is. And if you don't have a plan, it's all right. Just step away. But you need to make a decision whether you're going to be a scalper or you're going to be, a trend follower. And if you're going to be playing a strategy, say with the pivots, then you need to stick with that strategy. Because if you start scalping, then a lot of times what ends up happening is you take some gains, but you don't really, have the best. You're not taking the most profit where you should be. Like, say for instance, today in the afternoon, you can see. Let's see. If you would have got in here, yeah, this was great to take profit because this was, of the highs for the morning. But right there, that would have been a not bad, 30-point move. So ideally, you want to be looking for 30 points because if you didn't take profit, then you would have lost the majority of it. But this was sort of a risk-free trade for the afternoon. Like, I didn't have to trade this afternoon. Meaning I once 12 o'clock hit or 12:30 and I got in my position, I just walked away, and it either works or it doesn't. You see how this works? As in, yes, this pulled back, but if you're not even in the market to see this pullback, then it's like it never even happened. So if you just get in your position and you put your target like for the pivot, look what it ended up doing. Basically, it ended up taking an hour and a half to get from the very bottom of this pivot all the way up here. And it wouldn't surprise me if it took that long just because of the slow action and the fact that you have to remember this is considered a box day. So what's a box day? Well, we opened in the box. We opened in between the bull and bear pivot. So look what ended up happening. It's also a consolidation on a bigger time frame. You see how on the 30 minutes, I mean, this morning was just really, really nasty. You would say, oh, this looks easy where you have plenty of opportunity to go short, long, long. Well, no, if you're actually in this is just excruciating. You don't know what it's going to do. You're thinking that this is, you see this big candle and you think it's going to keep going. And if you don't take profit, then you lose all of it. And then when it comes down here, you think, oh, I'm going to get in here, but then it overshoots a little bit and then comes back up. So, I mean, this is, you're playing in the street, like literally the best risk reward for the day for the scoop was right here. And you literally could have got in and not even stared at the screen. It would have took you all day, but you would have had from 17,405 all the way up to here. So I'm assuming that's probably around, it was a little more than 100 points, and not really having to do anything. But if you were going to play all this is how you would play it. And I would implore you to start looking for failed breakdown or failed breakout reversals. It's the most powerful setup that you can have because it says a lot about what's going on in the day. So, like, say for instance, right here, and you can't really say in the first hour. It's hard to really tell whether it's a fake breakdown reversal. I mean, here you had an opening, which you had to look at the previous day. We were all on this chop, so that's why all morning they chopped us up, and it wasn't until this afternoon that they actually broke it out. But this was just not an easy day unless you got in at the extremes, and then you just had to hold. And I say extremes as in, when the first 5 minutes they dumped, you can't see the candles, but that first 5 minutes they actually dumped right to the T, right down here. And from there, you just have to scoop it up. You just have to believe in the levels, right? And the fact that, if I thought they were gonna break this level, they wouldn't be opening it up here. They would have opened it up below here, and then they would have gone down. this right here told me that again, we were in the box play. So you use that rule until proven otherwise, right? If we would have blown through here and that 5-minute candle held, absolutely, then I would be looking for more of a short. But until then, you scoop it up and look. That was an easy first morning trade after 5 minutes of a 50-point scoop, right? It's almost the sort of the same thing that happened here, right? That first 5-minute push, and then if you would have got in, that would have been a 100-point move right here to here, all within 10 minutes. That was yesterday. So, anyways, so back today, how do you tell whether you're in chop? Well, look, you need to look at your previous day's action, right? So you see all this come down, you see all this come back up. Now, you need to clear this 490 area, and if you don't, then it's resistance. And sure enough, it tapped it, came back down, came back up, sort of a double top right here, came back down, and they dropped it again. But I still wasn't convinced that they were going to actually drop this because of this candle right here. I mean, they scooped this up quick. If they really wanted to take this down, they would have already done it. So if you notice, remember on the left, we didn't have one single candle close. One single 30-minute candle close below this line. I mean, it was perfection. That tells you that they're holding it, And so if you're premature, if you're sizing big, you're just hurting yourself, right? Look at this. If you would have got in right here and had a 15-point stop, say one contract, that was actually about 10, but give or take, give yourself a 15-point stop. It's the same thing right here. You would never have gotten stopped out. And this is the main level. This is what you want to be looking for, is this main pivot. It's the 30-minute multi-day. The stuff in between, it is important, but I mean this previous day close is important, but it's not as important as these levels. These are your extremes. So anyways, so going back, what is a failed breakdown reversal? Well, it depends on the time period I'm looking for. I'm looking at the 9:30, the 10:30. Those time periods are very critical to know whether you're holding something or not. So what do we have right here? This was 9:20, 9:25. They're scooping this up. So we're not really at 9:30. Right at 9:30 or 10:30, we're right here. So at 10:30, they drop it the first 5 minutes. The second 5 minutes, they scooped it all back up and they closed back above, right? So that right there tells me this is a potential look below and fail. I'll say look below. This is a failed breakdown reversal. This is a look below and fail because the candle's never really closed. So what did they do on the next candle? They brought it back down right here, but they never made a lower lows, and they came up, and that was the low for the rest of the day. That's the low. So you have to be careful on if you're doing technical analysis, because all I care about is this with TA. This right here doesn't matter. You can get really confused. This is what I've learned. More point of interest you have. So I have this line here only because throughout the morning we had 1, 2, 3, 4, multiple hits to this line. So I say this line wasn't drawn, but once I started seeing this, I drew the line. But before then, like, one would have had a line right here. Like, I had a line right here thinking this is a consolidation. Well, one would think, well, if we broke out here, that means we're going down, right? Wrong. I mean, that would be correct if all of this was happening below a major support or outside of a pivot, but we're in the box. This tells me nothing, because this can be all fake. This could all be a faker breakdown. So that's exactly what ended up happening. And they came back up, came back down, and then it wasn't until right here, 11:30 was the hold. So they ripped it up, and they came back down. And once again, if you missed this opportunity, you had one more opportunity. And if you would have gone in right here, this would have been an easy 50-point play all the way up until 12 o'clock. So, okay, so now it breaks out. What do? You have to take profit. you have to take profit. You're coming into a new TPO. So if you're coming into a new TPO, I guess I ended up, there it is. I deleted those candles. You are coming into a new TPO meaning a new time period. You just have to sell. Plus, look, you're pushing right into the opening. So take your points. Like, this was a brutal, right? So take your points and reassess. And if you didn't, you would have lost majority of them, because what did they end up doing between 12 and 12:30? They ended up retracing and retesting this breakout. So this is what's considered a retest of this breakout, and then you have going into a support and VWAP. So zero drawdown, this is where you scoop up, and this is the afternoon play, right? So this is the end of the morning play, and then you separate your periods, and they pull back, you scoop, and then it never came back below here. And this is where patience, it takes patience. You just have to get in. You set your risk and have a plan. It either works or it doesn't. And one would say, oh, what happens if it starts going in your money? Should you have a stop to break even? Absolutely, if you want to do that, but just know that you might get stopped out before the move actually happens. So if you didn't get a good entry, if you didn't get right here, yeah, as you go up, you could have like moved it up and been break even, and you never got stopped out. But what happens if this would have came back and tapped again? Then you would have had a double bottom right here. That would have knocked you out, and then they would have reversed it, right? So you almost just have to that's why it's really good to know your sizing. If you have one contract right here and you risk 10 points, that's $200. And if you would have done that, you risk $200 for 54 points, really say 50 points, because we can't get exact entries. So 50 points times $20 is a point. That would have been $1,000. So you risk $200 to make $1,000, and you didn't have to sweat it. I mean, if you lose $200, you lose $200. And if you end up playing this morning, you hopefully were up a little bit and you're playing with profits. So if you're playing with profits, that's the reason why I don't necessarily like playing the afternoon anymore. But that doesn't mean you can't get into the action. And getting in the action means getting in at that 12 or 12:30 candle and then just letting it be, right? Say, letting it be. It's already proven that it's broken out of this consolidation. So let's go through the other parts of the chart and how you know where to take profit and have a plan. So again, you're using this as support, right? Failed breakdown reversal. If this ends up coming back down, this is actually going to be violent, and they will blow through this pretty quickly and violently because because of this setup. So from here, you want to have your opening, and you see that's where you want to sell, because look how I was having a hard time. Broke through. And then where's your next target? Next target is the fib, or not the fib, but the pivot. But guess what? Pre-market, this was actually the high. So what do? They blow through it and to it, and then a little bit more past it. So that's the problem about if you're not aware of that pre-market high, then you could get yourself in trouble. Like, say for instance, if you said you were going to get in right here to go short, and you would have had a 10-point stop. Actually, you would have been fine. I misjudged it, and I ended up getting in right here, and I had a 10-point stop, and I got stopped out to the tick, and then it reversed and came back down. I was just looking for a small scalp potential, them coming all the way back down here in the afternoon. But you can see this is the last 10 minutes. They ended up squeezing it out and coming all the way up to this fib. And then in pre-market or post-market, they ended up dropping it, coming back up. But at the end of the day, what really matters is that closing area. So tomorrow, line's going to be right here. And sure enough, this is what tomorrow's going to look like. We technically are in an uptrend still. So we possibly could pull back down here, and they could reverse it and come back up here. But you just have to be scooping, do not play against the trend. Today, you didn't want to play against the trend. So that's how you figure out these little points these little points of interest, pre-market high, that's where it could go. This next spot right here that I thought, you see over here to the left, you see how this is where these candles closed. That's where I put that. You put that marker right there, and it gives you a good gauge. And sure enough, these candles weren't wanting to close below that. So that's going to be an area of interest tomorrow right here, because this could be a possible, double top. So, just do watch out that the first hour, you could always have a push and fail. If you end up having a look above and fail, and they end up coming back down, this could be violent, and they can just destroy all the people that are going long. But on the other hand, if we start clearing, especially this pivot, then and it needs to be volume, then you're looking at a continuation, and this definitely can continue higher. Like if you're looking at a measured move, I mean from here to here, this was a 360 point move, and roughly, and this was a consolidation day for 2 days, and then your next move would be right here. So we could possibly end Wednesday or Thursday up here, but if we don't, and this ends up being a double top, and they break it back at any point below here, then look for a trend reversal. And usually remember, trend reversals have to be violent. They have to be violent. So if you wake up one day and you only see you were only moving a little bit, you might have saw, oh my God, look at this big candle. This right here is not a blimp on the market's radar, because look at this, it did nothing, right? So, but to you it might be a lot, right? That's why you have to be very cognizant of what's going on overall. So a trend flip would be something like this. You see how it was a lower high, and then the next day they dropped it below the EMA and the pivot, and so that was almost a trend flip, but then they recovered it and they flipped it back. So it's, see, like we're here on the upside, you had basically 2 days of consolidation, failed breakdown. See, look, failed breakdown, because it closed and then came back, and then they reversed it the next day, and now that huge candle was the reverse of the trend. Same thing on the downside. You see how right here you had big candle through the EMA, they scooped it up, and then that was the continuation. This was into the year. So I just want to show you that, at least on the ribbon, it's really good and helpful to notice your trends. But until you actually have some kind of massive move to the downside, you have to assume that any pullback into this ribbon, you need to be scooping and going long. So that is a review for today. The lesson I want you to remember is I want you to remember that every day brings opportunity. If you miss, you don't want to get chopped up. Look for failed breakdowns or reversals. Know your support and resistance areas, and don't be afraid to get in. I'd rather risk 10 points here than risk 10 points in this crap right here. Know that if you just walk away and come back at certain time periods, like 12 or 12:30 or 10:30, you might be able to find other plays to salvage your day if you end up not doing well that first 2 hours. So don't sit and stare at a chart. It'll only drive you insane. And know that the market just wants to move. It does not like to stay idle very long. You can see it all morning, it was idle, and then the afternoon they started making their runs. Yesterday they made their run in the morning, and then they were idle in the afternoon. But there still was range if you knew where to find those plays. So good luck, and I hope this helps. Just remember, if you're looking at my chart and how I have it set up, it's the SATI ATR levels with the it's called the Sonar Law HTF overlay candles. These overlay candles are 30 minutes. It breaks down my my periods of the day, and then I use 5-minute candles. 5-minute candles are the perfect candles to see what is really going on. Look at this. Candle not closing. Okay, I know to go long right here. The next 5-minute candle, boom, move up. candle closes, wait the next 5 minutes. What does it end up doing? You should have a retrace. If it doesn't, it comes back above. It's a failed breakdown reversal. It's over a key area. That's what you want to be looking for, is those setups around key areas. And then from there, that's it. In the morning, what I recommend if you end up trading the first 30 minutes is it's highly recommended that you use the 1 minute candles, because it's very hard to see how those 5 minute candles close because there's not enough. But right here you can see 1, 2, 3, and then the fourth candle, is right here, and they brought it back down, and then they actually they never made it down to here. They were about 5-6 points off. That's right. So that's why you have to be super careful about these quick pushes down. As in, you're just gonna have to either risk front running it, or you're gonna miss out on the whole move. So it all comes from planning. But either way, if you notice the first 30 minutes, which is this whole period right here, you play with the 1 minute candle, and it allows you to see what's going on. Okay, we're above the VWAP. Okay, you need to be going long and scooping. But ideally, if you don't play the first 30 minutes, you could have easily made money and made your points. Because look right here, after 30 minutes, you're at your highs. What do? You short it. It comes all the way back down. You have to recognize you're in chop, right? So it all comes down to situational awareness and being able to read price action. But that's it. All right, good luck.